So when Heath and John Thurman and I were talking about this message of freedom, it reminded me of a story from when I was making the transition from the company side to come into IOA. 16 years ago today, I got in my car, I drove from Orlando to Lakeland, Florida, where Auto Owners Insurance Company has a branch office, and I put in my resignation. And when I was talking to the gentleman who was my then boss, Bill asked me to extend my 2 weeks notice to 4 weeks so I could help train my replacement. But what he wanted me to do was get on the phone and call all the agents in the Orlando area to make sure they were okay with the fact that I was going to have access to their computer system, which had, expiration dates and rates and premiums and all that kind of stuff in there. And if anybody had an issue, they were going to call him, have them call him, and he would make other arrangements. So I get back to Orlando in my office. I worked out of my house. I started making phone calls, and almost everybody was remarkably nice. I mean, they couldn't have been nicer about it. One agent even offered to help me, learn how to sell, because he arrogantly said, "Well, I've trained half the people at IOA before they got there, so I'd love to, teach you how to sell." But I got a hold of one guy, and I told him I was leaving to go on the agency side, and he said, "Where are you going? Insurance Office of the Universe?" in a real snide voice. And I said, "Well, actually, yeah, I'm going to Insurance Office of America." He said, "Well, good luck with that," and he hung up on me. Well, that very nice gentleman had a run-in with my boy Brian Buckley about 18 months later, and that's why Buckley's over here now. So, he was, that attitude he had was pretty consistent with how he treated a lot of people. And it was consistent with what a lot of agency principals, how they treat their staff. But it got me thinking. It had never occurred to me up until that point that anybody would think that calling ourselves the Insurance Office of America would be an ostentatious thing. That was not something, for me, it was very logical. You saw Jerry Watson up there talking about the original branch in New Jersey. I had been working with IOA when it was Insurance Office of Florida on the carrier side. I knew exactly why the transition happened. Having an Insurance Office of Florida office in Cherry Hill, New Jersey doesn't make a whole lot of sense. But it got me thinking when I was getting ready for this presentation, there is a level of responsibility that comes with calling yourself the Insurance Office of America. I personally think that this is the greatest country in the history of the planet. And I say that as a fact because I believe it. There is no place else I would ever want to live. And there's a lot of anger and things going on in this country today. But when I ask people, well, okay, it's so bad, where do you want to go? Well, nowhere else. This is still the best. And I think that when you are calling yourself and naming yourself after the greatest country ever, we have a certain amount of responsibility that we have to live up to. And I think that we as a company are the best agency ever. I'm not saying we're perfect. I'm not saying it's always going to be a work in progress, but I can't imagine wanting to work at someplace else. And again, I don't say that because I have to as the president of the company. I say that because I truly believe this is the very best place to be an insurance agent, and not just an insurance agent, but to work in general. I think it's a great place with a lot of great people. So when I started looking and thinking, how do we live up to the name Insurance Office of America? I'm a little bit of a history buff. My dad was a history major. My daughter is minoring in history in college, and we spent a lot of time reading and talking about history. So when I started looking through some things, one of the first things I came across was the Declaration of Independence. And these words for us are something that are very familiar to, if you went to school in this country, you learned about the Declaration of Independence. But there's some of the lines in there I want you to think about a little bit. The right to pursue life, to pursue happiness, the right to life, the right to liberty, and the people's right to set aside that government. Up until this point, this was a radical way of looking at government. Until we got to the late 1700s, governments had always, from the beginning of time, been set up for the ruling class, by the ruling class. There were kings, monarchs, queens, emperors, the people who were in charge, at the elite level, everybody else lived to serve them. And if there was an overthrow of that government, all they did was replace one form of dictatorship with another. So when you look at that, this was radical. Today we think of this as just a logical way, and large portions of the world have followed our example. But this was not just a natural thing for somebody to come across over 200 years ago. So how do we live up to this legacy? Well, if you think about how we were founded, John looked, using this example of there was unjust government. The company that you work for today was set up in a reaction to a system that was unjust to the producers. When we want to if you think about our business, nothing happens until a policy is sold. So setting up a business that rewards and is for the rainmakers, the people who are bringing in the deals, was a radical different way of looking at the business. It was every other business then. If you look at the way traditionals are set up, agencies are set up now, they're all about the shareholders. So profits, by definition, have to be their first priority. Profits are extremely important to us, but they're a byproduct of us being the best place to work if you're an insurance agent. So when you look at what John was looking for at that time, it had to do with contract, it had to do with ownership, it had to do with freedom. Heath hit on this, and you're going to continue to feel this theme. The not having somebody micromanage everything that you do and watch. Come into the meeting every Monday morning. What is in your pipeline? How many referrals did you ask for? Having a contract and an ability to become a shareholder, so you have a vested interest in the agency itself. And there's some of the agencies where you can get stock, but they don't want to give you equity in your book of business. We want you to have both. It's a different way of looking at how an agency should be set up. We put people first. Heath talked about going and spending time with your family. Entrepreneurialism, equity, individuality. These are all things that at IOA are at the very core of who we are. And it's a very different way of looking at business. CIAB is the Council of Insurance Agents and Brokers, and I sit on a committee for them, and I was in DC about a month and a half ago, and they had the CEO of Marsh in there, and he was talking about what he called lifestyle agencies versus profit-driven agencies. And what he meant by that was very few agencies, almost all agencies, their first goal is profit, but some agencies have kind of morphed as the agency principals got older into, hey, this is more about being able to come and go and play golf. We put that out front. It's not an accident. It's not a reaction to just a stage in life. I spent, Jason, referred to me coaching. I've been here 16 years. I just stopped coaching last summer. From the day I got here until last summer when my kids got into, my youngest got into college and I couldn't coach her anymore. Until that point, I spent a lot of hours coaching. And I would walk right by John Rittenauer's office at 4 o'clock because I had to go to a Little League game. And never once did I feel like I had to hide that fact. I don't know of a lot of other companies that would have appointed somebody who put their family before their job as president, but IOA did. So when you think about the next stage of how do we compare, so I think at our foundation there's a lot of correlation between IOA and the United States of America. There's a challenge in this country today. This election is about an argument over big business versus big government. So if you think about the way this country was set up, in the 1800s, from its inception through the 1800s, most of the country believed in something called laissez-faire economics, meaning the markets control themselves. So if that was okay prior to the Civil War, because what you had was an agricultural-based economy, you had small shops, small businesses. It wasn't the end of the world that businesses were supposed to govern themselves because no one business had that big of an impact on the country. But after the Civil War, you started to see in the Industrial Revolution these huge mega corporations come into play. So the freedom of the markets from the government turned into a less free market because you had monopolies. As an example, you had John Rockefeller in, I think it was around 1878. At that point, he garnered 90% of the oil refinery production inside of the United States. And I want you to think about one man having control over oil, which controls how much of our business in this country. So what happened was the government felt like they had to step in and try to break up these big corporations to bring freedom back into the markets, ironically, that they wanted to have more freedom by breaking up these big corporations. That's when you had in the 1880s, you had the Sherman Antitrust Act and the Interstate Commerce Act, and some things that came into play that really moved business into the government's eye. And you started to see the government's moving and marching into business. So as time has gone on over the last 130 years, the majority of Americans think that the government has overshot its mark. There's a recent Gallup poll that said 60% of all Americans think that the government is too powerful. Now, for some of you, that may seem like a small percentage of the population, but just 12 years ago, it was only 49% of Americans thought that the government was too powerful. Now, it's up to 60. 12 years is not a long time for that large of a percentage of our population to change their mind. And if we don't learn as a country to get our balance back on the government side, that 60% number is going to continue to climb. It's the biggest challenge. It's what's being talked about in this election over and over, is the difference of opinion in this country of how government and business should interact. So this is our challenge moving forward. You know, Heath mentioned the 1,200 families that make their living out of this company. That's a big responsibility. And when I talk to people inside of IOA, not just producers, but employees, across the country, it's amazing how many people tell me that their entire family's financial health is predicated on how well IOA does. And I can speak for the board of directors. Every morning when we get up and we go to work, that mantle of responsibility is on our shoulders. We know we have thousands of people who, if we don't do our job, people are going to lose their house, they're going to not be able to feed their kids are going to not be able to go to college. That's a big responsibility for us. And I know, when I come to work every day, I don't look at this like there's 1,200 people working for the board of directors. Our board of directors comes to work every day working for those 1,200 people. And we're trying to make sure that this company is here and it's safe and it's strong. And so because of that, I think this is our major cultural dilemma moving forward. How do we balance the freedom and entrepreneurial spirit that we have with the need of professionalism and standards that are going to allow each and every one of you to have a job 6 months from now, 6 years from now, and generationally 30 and 40 and 50 years from now? We have to recognize, all of us, we are no longer a mom and pop shop. And so what happens is sometimes standards have to be put in place to protect all of us from each other. There are some wonderfully brilliant people in this room, and even wonderfully brilliant people make mistakes. And when we see something from a macro perspective that we have to address, we're going to have to address it. That's something that moving forward we have to do that. But how do we balance that? How do we make those two things go together? The first thing, and I think the most important thing, is that your chairman, your CEO, myself, the regional presidents, we are all continuing to be active producers. I don't think we can get to the point where we used to be producers. We have to be producers because the environment in which each and every one of you is selling is changing at a rapid pace. And if I hadn't sold a policy in 15 years, I can't really understand what it is that you're going through every day. Because I think 15 years from now, selling today is different than it was 15 years ago, but it's not radically different. I think 15 years from now, selling is going to be a lot different than what it is. And if we as the majority of the board of directors are not folks that are selling, we're not going to be able to relate to what it is you need as producers. And for us to be an agency about producers, that would go away. We need to have communication between all of you and your branch reps, your managing partners, your regional presidents. Those are the folks that are out in the field every day. If you don't work in the Longwood office, you're not going to see Heath, you're not going to see John, you're not going to see me on a daily basis. But you have branch reps, you have managing partners that have access to these guys down here, the 5 regional presidents. And that's something that as we put in professional standards and as we start to make changes, that we have to do. It's not optional. This is not something that we can choose to keep things exactly like they are. We have to move forward if we want to be competitive. We need communication back, because if we start turning into the federal government and we have overshot our mark and start to become corporate, we need to get feedback. We need to understand that. We may not, in a lot of cases, may not agree with what your position is, but we need to continue to get that feedback. In my mind, there is a huge difference between being professional and being corporate. When I was talking to the employees in December in Longwood, I gave a definition of corporate as organized lovelessness. And that's how corporations are set up. The corporation starts to live for the rules instead of the rules being there to serve the corporation. I don't think we've gotten corporate at all. We do have professional standards. We do have guidelines in place, but that's just to make sure that when you show up to work and you expect your commission check, that money is going to be there. So what is our culture? So if we're going to talk about this and talk about how we're going to embrace this entrepreneurial spirit, what does the culture of IOA mean? A couple months ago, I was at an insurance company meeting, and they brought in a guy who I thought gave some really pretty good perspective on what culture is. The first thing he said was, culture and heritage are not the same thing. If I walked around the room and started asking a lot of you about culture, what you would start to talk about are historical events. Heritage and culture are not the same thing. Heritage is about the past. And the guy's name was Jim Knight, and he talked about culture being about the present. And they gave us his book when he was done speaking. He gave what I thought was a great definition of culture. Culture is the collective behaviors of the employees at any given time. I thought, you know what? That's really true. Every day, because a culture is evolving. Some people leave the company, some people come in. But what that also means is that each and every one of you, when you show up to work, you own the culture. The culture is not about Valley Rittenauer. The culture is not about John Rittenauer or Heath Rittenauer or me or anybody else. This culture is about every one of you and understanding collectively what we're trying to get in living up to that ideal. When everybody in the company is talking about the culture and understands it and is rowing in the same direction, that's when you have a great company culture. We've had that since our foundation in '88. We need to continue to do that moving forward. So what do I think moving forward our culture is going to be like? I think there's certain things that can't change. I think, we've talked about, and I just talked about being a sales-driven organization. We have to have salespeople at the top of the agency who are still living in the world that all of you live in. We have to continue to build the best tools. We started, prior to me coming to IOA, they bought this software program called SmartComp, and I think the agency paid $30,000, which was an astronomical sum for the agency at that time. But what it did is it got us moving away from the traditional, our agent had a contract with CNA, the agency down the street had a contract with Travelers, whoever had the cheapest price won the deal. It got us into talking about how experience mod makes up and starting to get us to sell on value, which led to the hiring our first claims advocate as we realized those claims started to go away. Casey Gutman is in this room. She's now our producer. But we hired Casey because other agencies had claim intake clerks. We hired a claims professional. And I don't think it's been 20 years, but I think it's been 16 or 17 years since Casey came on board. That was a radical, different strategy for engaging our clients. At least in the footprint that I was aware of, I didn't know of any other agency that was doing anything like that. That morphed over time into the risk practices group getting together and the creation of Risk Score and the shared services and benefits and the total risk services platform that we have. That kind of creativity and entrepreneurialism has to continue as we move forward. We have to have the best account managers. So, I've talked to John Thurman about this on a number of occasions. One of the reasons IOA is successful is we were founded by a great producer. But what doesn't get a lot of credit is that from the day we opened, we had an A-plus account executive in Valley working with him. John couldn't have done what he did if he didn't have a great account manager working with him, keeping the clients happy. Some folks in the room may not really want to hear this, but there was a Johnson and Higgins study in the late 80s, and those of you who don't remember, or you're not old enough to know who Johnson and Higgins was, when I got into the business, J&H was, in my mind, the standard of what an insurance agency should be. They were very, very professional. They did a phenomenal job. They were really tough to beat at point of sale. And to take an account away from them was next to impossible. Marsh bought them. The culture and the brand went away. And so for some of you in the room, you may never even heard of what was one of the best agencies that have ever played in our space. But they did a study in the late 80s where they really wanted to go in what drives account retention. And guess what? It wasn't the producer. It was the account manager. And we find the same thing when we do our surveys, the Net Promoter surveys, which I'm finding, in some of these conferences I go to, a lot of agencies are using. The responses we get back about how quickly the account manager responds, how easily they are to access, how professional they are, all of that stuff, that's where we get most of our positive responses. It's not about us. So we have to, moving forward, we have to live up to the legacy of having great account managers. That's how we're going to get where we need to go. We need to act like partners. What I mean by that, there's a lot of different definitions of partners. We throw it around. It could mean that you own stock. It could mean that you share an account with somebody. That's not what I'm talking about here. The foundation of this company, at its core, as an integral part of our culture is, we need all of you doing things that don't put money in your pocket. If you're getting paid for it, that's part of your job. If you're not getting paid for it, now you're being a partner. So there are committees and benefits that these folks are putting a lot of hours in trying to advance the entire benefits department. That's acting like a partner. I go to these carrier meetings and I see a lot of our folks from around the state who are taking time out of their day. It's not a golf event. They're sitting there listening for 3 hours to somebody talk about the insurance business and the insurance carriers. If you talk to these carrier folks, they put a lot of thought into our meetings. We need to show up and be there. We need to be a part of that. We need your help recruiting. We need your help going to industry association meetings. All of those things are the way we act like a partner. 25, 26 years ago, we had agents involved in IT and HR and all this. We need professionals in those roles now. We're too big of an organization for that. But there's still plenty of stuff that all of you can do to act like a partner inside of IOA. Heath hit on this. We need people who want to be here. I can't tell you how many times I hear from carriers, man, I meet the IOA folks, I go into a branch or they come to this meeting or one of the regional meetings and everybody's so happy. Well, that's because it's part of our culture. If you're not happy, leave. And I remember the first time I heard John say that, it kind of took, he goes, if you're not happy, get the hell out. That was his motivational speech. Well, I understand now what he said. At the first, I was taken aback when he said it, but now I understand what he's saying. Life's too short. We want you to be happy. And I think if you really want to be happy, there's no better place to be happy than here. Some things, though, I think may have to change. Our selling styles. I alluded to it with risk services, and those of you who are risk practicing partners, I really think you need to look at what the benefits folks, ask them what a selling process is like inside of their space. They are not confined by X dates. For us, for the majority of us in here who are P&C people, our selling process is defined by an X date. The policy closes itself. There's still a huge element in price in what we do. I heard Brian Buckley talking last night, and he was talking about, okay, 40% of our sale is on price, 60% has to be on the value. And I think that's a real good way of looking at it in 2016. I would argue in 2025, it's going to be 95% about the value and 5% about price, because that's what it is in the benefits world right now. Yeah, they look at it, but they know that every agency can spreadsheet the same carriers. So it's not about who's cheaper. It's about how are you going to help me leverage my insurance spend to make my company better. We have to embrace big data. For me, most of my time in thinking about big data, that always seemed like a very impersonal thing for me. Big data was, I am now a number. But as I've researched and listened to experts and read books and really kind of thought through the process, big data is not about making your customers a number. It's about making the insurance sale more intimate. The companies that leverage big data and the industries that leverage big data are getting to know their clients in a level that it's so intimate that they're anticipating their customers' needs before the customer knows that they have them. That's what big data is. And we as an industry are terrible at it. We are still selling in a style. If you think about your renewal process, so if you're doing a good job as an agent, you go out 90 to 120 days in advance and you gather some information. You tell them what markets you're going to go to. You go to the markets. You get the quotes. You send a whole bunch of questionnaires. Loss control goes out and visits the client. You come out and you present your numbers. The client asks for some changes and tweaks, and I want this umbrella limit. I got to get rid of this. I got to do that. You go back and you get more information from the underwriters. You go back at last time. You present the quote, and then you bind it, and then you show up after and deliver the policy and hope everything was correct. Sound familiar? How many things do you buy that are that painful? Almost nothing you purchase as a person in 2016 in today's world is that painful. If you go to buy a car, you know exactly what you should pay for it. It's not like 15 or 20 years ago where you'd haggle and hope you got the best price. You walk in there with a piece of paper and say, this is what I'm paying for this car, and you do it. It's a different world that we live in, and we as an industry are going to have to figure that out. And the agencies that figure out first how to make that process less frictional, a more frictionless transaction, and a more intimate service process, those are going to be the agencies that are going to thrive in the future. We're going to have to accept some professional standards. Like he said, we do not want to be corporate. It is never our intention. If you know those of us on the board, that is not how we're wired. If I had somebody looking over my shoulder every Monday asking what I was planning on doing this week and what I did the week before, I wouldn't be there long. We don't want to be that company. But we do have to accept the fact that there are certain things that we're going to have to do differently for the good of all of us. We can't let one rogue person, one cowboy, jeopardize you. And it's not just financially, it's our reputation. In the world we live in today, what you put on the internet affects me. What I put on the internet affects you. So we have to look at those things, and we have to stay on top of that, not because we want to be Big Brother, but because we want to protect each and every one of you and your families. The last piece on this is we have to rethink how we look at retirement and book perpetuation. And it's not been across the board. I am here because a gentleman named Vern Dunow looked into the future and said, I need to leverage my book of business. His book of business the year before I came to IOA was $57,000 of revenue. And he convinced me to leave a good company with a good job to take a chance on coming to IOA because the chance or that I was going to inherit that book of business. He could have very easily sold that book of business to one of the existing partners inside of the branch in Altamont Springs at the time. There was a lot of good agents who had way more money than me. The most money I'd ever made in my life up until that point was $50,000. I ended up, when he walked away, owing him $667,000 to buy that book of business. I had never made more than $50,000. He took a huge chance because he wanted to perpetuate this agency. John has taken great steps to make this a generational company. He is part of the vision that he has for IOA is that it outlives all of us. Well, for that to happen, we have to leverage our books of business. We can't have one person inside of our branch selling to somebody who's 5 years younger because it's the easier thing to do. I mean, I understand that sometimes that has to happen. There may be some technical books where things like that has to happen. But for the vast majority of these transactions, what we need to do is take those books of business and go find the next generation. And I would challenge those of you who are bigger producers to break your book up. If you've got an $800,000 book of business and you went out and you said, okay, and you found two folks and said, in less than 2 years' time, I'm going to transition out and you're going to get half of my book of business, you could easily get somebody who's be willing to come in and take that $400,000 book. And you could match them up by personality with accounts. I think it would be more secure for you. And oh, by the way, if you take a rookie producer and give them an $800,000 book of business, it's going to be all they can do to maintain that book. But if you give a rookie producer with some talent a $400,000 book, they're going to grow it. And I would argue that at the end of 5 years, your $800,000 book will be $1.5 million, $1.6 million inside the system, and you've helped perpetuate this agency that has been so good to you in your career. So the last thing I'm going to talk about when we get into the IOA in America is, you know, as I'm doing research and looking for this, I come across the Gettysburg Address. These are words that many of us are very, very familiar with. A lot of us had to memorize these when we were in school. So when you think about what Lincoln was going through when he went to Gettysburg, he went 4 months after the battle. And if you're not a history buff like me, 51,000 men died in that battle. That's more people than died in the American Revolution. The war was horrific. It was bloody, it was long, and the people in this country were being worn out. When the North, really the Battle of Gettysburg was a draw, but the South retreated from there. Hindsight now, we know that it was inevitable that the North was going to win the battle, that the Union was going to prevail, because the South was going to eventually run out of money, run out of people, run out of supplies. It was just a war of attrition. But they didn't know that then. So when Lincoln went to talk to the people, he was dealing with a dejected, beaten people. When I look out today, I think we're facing nothing as horrific as a civil war, but I think we as a business community are facing something that is very scary. We are in the middle of what some people have termed as the second industrial revolution. I think it's more of an automation revolution than an industrial revolution. But there are a lot of jobs in this world that are going away, and they're not being replaced at the same pace that they're being lost. Another industry meeting I was at a couple weeks ago, Bobby Reagan spoke, and I don't know if you guys have heard of Reagan Consulting. They're one of the premier consulting firms for the insurance agency business. And Bobby was talking about, in 1995, the average insurance agency had $81,000 of revenue for every person they employed. In 2015, that number was $164,000 of revenue for every employee. Even if you account for inflation, 24% of the jobs in our business are gone, because we can show how much more automated, how much more work. Everybody in this room is handling at least 24% more work than your predecessors did 20 years ago. that number is going to continue to go up. And IOA's numbers reflect the industry averages. We are getting a lot more work out of a lot less people. So when you look at that, I think for a lot of our industry, that's really scary. For Insurance Office of America, I don't think that's scary. I think that's an opportunity because we're entrepreneurs. If you're an employee, you're going to lose your job. If you're an entrepreneur, you're going to create a job. And in this company, we are embracing that, and we are gaining market share. We are adding people. We are growing because of who we are as a company. So when Abraham Lincoln was trying to inspire hope, I feel hope from you people. When Abraham Lincoln was trying to instill confidence, when I talk to you, I feel confidence. So when he was saying the words that a government of the people, by the people, and for the people shall not perish from the earth, he was trying to help build people up. I don't think we need to be built up. We're ready because an insurance agency that is of agents, by agents, and for agents will continue to be a dominant force. Thank you.